Get right back to the markets, shall we? And with the markets under pressure, which are the stocks to keep on your radar, our team of research analysts is joining in to tell us just that. And also we have with us on the show Sameet Chavan, technical analyst at Angel Broking. Right on, Den Networks on the NSE is struggling in today's session. Sameet, I'm curious, what does one do right now?
Clearly, the stock looks quite weak. It has been, struggling since last many days. And now, if I just look at the price action, I don't see any encouraging sign in this counter. So what I would suggest is any bounce back from current level, probably towards 80-85. I'm not sure whether the bounce will come or not. But if at all it comes, then 80-85 would be an exit opportunity.
Okay, meantime, what exactly is the outlook based on the chart pattern? 5% lower right now, Sameet. Are you avoiding this one?
Yes, since last couple of months, we've already seen massive correction in this counter from the levels of 86, 88. So this underperformance is likely to continue. So at least for short-term traders, any bounce back from current level would be an exit opportunity. But if you have a medium to long-term view, any dip, see probably towards 55, 52 would be a good buying opportunity.
Keep the countdown going. Stock number 11 is Motilal Oswal, and that sure is bucking the trend. But the question is it just a one-day wonder? Technical take on Motilal Oswal. Okay, I'm not too sure he can hear me too. Nonetheless, the view on the technical charts is that Motilal Oswal can see a bounce further. What is smart move on trade today at 8:24? Meantime, Poona, let's talk about 8K miles, double-digit cuts coming in here.
Clearly, this stock has already seen massive nosedive over the past few months, and today also we are seeing this stock breaking its important support levels. So we would expect continuation of this downward move. I don't see any encouraging sign, at least on the chart. So one should avoid bottom fishing at current level, and this stock is likely to continue its southward move, at least towards the 375 over the next few years.
Okay. And what it's taking down with it today is also NTPC. Let's understand the chart pattern, Sameet.
Last month, there was a breakdown, from its major support levels of 160 to 165. Previously, on 5 to 7 occasions, this stock managed to hold this important support level. But last month, there was a decisive breakdown. This was followed by a sharp correction and then pullback. And today, again, we are seeing quite a bit pressure in this counter. So this stock is likely to remain under pressure. Any bounce back in the near term at least would be an exit opportunity. We expect this stock to slide further. 145, 143, these are the next levels to watch out.
And Sameet, it's South Indian Bank that's clearly at the receiving end of selling pressure in tandem with the rest of the markets. Question is it only going to continue?
See, although the stock has corrected significantly in last one or two months, if I just look at it from a slightly broader view, the stock is now trading around its major supports. 2021, according to me, would act as a very strong support, and from here on, the possibility of giving some kind of relief rally is quite high. So I would advise, creating fresh shorts. One should avoid creating fresh shorts on current level, and those who have bought it at probably higher level, they should stay put. One can keep a strict stop loss below 20, which seems to be a very strong support.
Then we'd like to take time out to thank everyone for joining in today on Market Fatafat and walking our viewers through all the buzzing stocks and smart stocks on the chart. With that, it's a wrap. Stay tuned. We've got closing trades coming up.